Okay. Please, I want to alert you that some of these things we are discussing are highly examinable at the theory. You can be asked to define single entry, define or explain incomplete records. You can be asked to state 3 or 4 reasons why some businesses use this single entry system of bookkeeping. So please take note of them, right? Advantages and disadvantages. Let's look at the advantages. Quickly, somebody should read it for me. And who is going to do that? Prof. Issy, I haven't heard your voice this morning. Can you honor me with your voice?
Yes, please. Advantages, please, should I go on?
Oh, yeah, sure. Go ahead. Go ahead.
Advantages of single entry system and incomplete records. 1. Is easy to operate. 2. Less expensive to operate. 3. Used as a means to avoid tax.
Thank you very much, Prof. Issy, for that awesome voice. So it is easy to operate, like I told you. You can agree to this fact. The double entry is a bit, stressful, right? Single entry, you just put one. You just record your sales. You forget about the cash or the data involved, or you only record the data and forget about the sales bit. It is less expensive because you don't need the services of a qualified accountant who is going to charge you huge sums of money as salary. And then it is used as a means to avoid tax. I think I've explained this. Some businesses deliberately don't keep proper records so that when you are assessing their profits, it's difficult for you to do that. Hence, they will pay a lesser tax. It's not always the case though. Sometimes you don't keep proper records, you might end up paying huge taxes. But for most of the times, they pay lesser. Disadvantages, Prof. Jacinda. Let me hear your voice on this one. Disadvantages.
Disadvantages of single entry system and incomplete records. 1. Preparation of financial statements is very difficult.
Okay.
2. Bankers and tax authorities may be reluctant in accepting accounts prepared from incomplete records. 3. Profits determined from single entry system and incomplete records may be overstated or understated. 4. There is no convenient way of proving the arithmetic accuracy of recordings made in the books of accounts.
Awesome, great. So, dear professor, some of these points are very simple. Others, I'll take my time and give examples and scenarios for you to understand. So, the first one says that if you are using the single entry system, which will lead to incomplete records, when you are preparing your financial statement, is very tedious. Now, let me give you the clearer picture. The clearer picture here is that any business that uses the single entry, this is what is going to happen. The person cannot prepare trial balance, okay, because the person does not do debit and corresponding credit or credit and corresponding debit. So if I give examples of transaction, maybe sold goods to AC on credit, this business may only focus on the data AC and record and forget about the sales. Okay, so if it happens like that, you can't prepare your trial balance adequately enough. And number two, some of the figures may be missing. So you might not have sales, or even if you have sales, the credit sales might not be there. Okay, credit purchases may not be available, or even total sales and total purchases may not be there. The expenses incurred for the period may be, in fact, may be scanty, as well as the income, right? Some businesses cannot even give you the capital they have invested in the business. It's possible. And it is common with these market women. If you like, go to the market, pick randomly, and ask them, so, mommy, how much is your capital? The first question is, what is the capital you are talking about? Right? They have no idea. yet they are doing business. So it makes preparation of financial statement difficult because without the capital, without the sales, without the purchases, you can't prepare your TPL and balance sheet. So that's the first point. Number two, bankers and tax authorities may reject this type of system. If you are going to the bank to say request for a loan or apply for a loan, they ask you to bring your business document because they want to assess your liquidity levels. Do you have enough cash that you can settle the loan? Is your business generating more profit? So they check your financial statement. If you are using the single entry, they might reject. In fact, they will reject, and you might they will reject. The tax authorities may also reject such records, right? Three, profit determined from single entry records may be overstated or understated. Let me give you one common example. You see, um, I, I had this auntie who was selling um shoes in the market. This is what she was doing. If she sells shoes and receives the money instantly, she doesn't record it in her books that she has made sales or she has received money. But she only records when you buy and you don't pay. Then she has a small notebook. She'll write it in it. Yao owes me 100 cedis. So if you ask her to submit records, the only record she has is those who are owing her for the shoes she has sold. There's nothing like she has a record for all the sales she has made. Okay. So this is a typical single entry system. She's not bothered about debit and credit. Okay. Now, if you are determining her profit, it will be very difficult because this woman, first of all, was not keeping total sales, was not keeping anything. Like I told you, the only records she had was a notebook of names of those who were owing her. That's all. And I'm sure some of you have experienced this with either a relative or maybe a friend. Number four, there is no convenient way of providing or proving the arithmetic accuracy here. You are not doing a double entry, so how can you show that the debits are equal to the credits for your trial balance to balance? It's not possible. Okay, so let me pause here and get some thoughts from you. Please speak about this topic because it's very practical. Let me hear you on this thing. Have you experienced this before? Maybe you are in a grocery shop, you don't keep proper records. Please, henceforth, change your mind. Be the accountant of your family business. Yes, I want seriously, I would want one of you to share if you have an experience maybe running a grocery shop or maybe it's a family shop, but then you get the opportunity to be there. When you sell, do you record in any book? Oh, professors, talk to me now. Talk to me. Uh, Prof. Efia, Ella, Jacinda, Mame, Ya, Nancy, and okay, Prof. Ella.
Okay, so my mom has a provision shop,
Okay.
and we are guilty of this. We don't, at least this one, they do single entry. We don't record anything. Um, as we only record when, let's say, someone buys and the person doesn't pay,
Oh,
so
okay.
that in case of any misunderstanding, we just show the records to the person that you came to buy this at this date, so yeah,
Oh,
we
okay.
don't record
Okay.
anything, right?
Yeah. So you see that
But trust me,
uh-huh. Henceforth you are going to do the right.
my mom has every, my mom has counted everything in the shop, so I think she has records in her head. I don't know.
Uh, yes, that's the funny thing. Most of the women use their brains as their record, as their day books and ledgers. I think I need to acknowledge someone in the class, Prof. Natasha. I think this might be the first time. Prof. Natasha, can we hear you? A good morning to us and your name and maybe a bit about your school and stuff. So I'm really appreciative of the fact that you acknowledge some of these things happening even with your family business, etc. Okay. Now, like I indicated from the onset, the main reason why we are doing this topic is for us to be able to convert the single entry and the incomplete records into double entry and complete records. At the end of the day, we want to be able to prepare the financial statement. That's the profit and loss account, the trading account, and the balance sheet. So we have to follow these steps. I put there 5. In your textbooks, you might see 7 or 8, but I do 5. So we are going to read these steps and digest them one by one. Prof. Natasha, can you read the first step for us? Prof. Natasha. Okay. Prophecy. Profia. Yes, I haven't heard from Profia. Profia, please read the first step for us.
Okay. So steps in converting incomplete and single entry records to double entry records to of the year to ascertain the opening capital for the financial year.
Thank you very
Should I
much.
continue?
We'll do it one by one. So as we read, we explain. So my dear professors, the first thing you have to do is to calculate the opening capital. How do you do that? You prepare a statement of affairs. You prepare a statement of affairs. Please note that one. So in an exams, you could be asked, which of the following is prepared to determine opening capital, dear professor, or even capital? If they don't bring the opening, is a statement of affairs, and we'll get to know that. Step number 2, Prof. Senam, can you read that for me?
So so the steps
Yeah, number
the
2.
steps in converting incomplete and single entry records. Okay, so um draw up the debtors and creditors control account to determine credit sales and credit purchases respectively.
Thank you very much. Let's get that down. So the step number 2 is you have to prepare. The draw up means you prepare your debtors account and your creditors account. When you prepare your debtors account, you are looking for your credit sales. You know credit sales brings debtors, right? So it makes sense to say that prepare debtors account to get the credit sales. Then you prepare the creditors account to get your credit purchases. Good. Point number 3. Okay, let me do this one. Prepare the sales and purchases account. If there are cash sales and cash purchases. Okay, so you prepare your sales and purchases account. The essence is for you to get your total sales and your total purchases. Okay, great. The next one is you prepare the ledger accounts to adjust for expenses and income. So in essence, you prepare your expense account and income account to determine how much expense you have incurred as well as how much income you have earned for the financial year. Okay? So just speaking to Prof. Ella's issue, I'm sure if you ask Prof. Ella and her mom to tell us the total amount of electricity they've bought for the shop, I'm sure it will be chaotic because they might now be looking for the prepaid receipts to combine or sum them up for you. But if they were keeping the electricity account and therefore each amount they bought, they debited the account, then they would have just easily referred to the electricity account and give you the figure, right? So sometimes you have to prepare the expense and income account to know the expense and income. Then the fifth one says prepare the cash book. So I'm sure Prof. Ella and her mom's business don't have a cash book, even though she has learned how to prepare cash book, she hasn't prepared. So you need to prepare that. And the essence is for you to know the cash or bank balance, any drawings, okay, and any amount paid to creditors or amount received from debtors. Okay, so you go through these 5 steps, and the final one is you now have your sales, your purchases, your expense and income, so you can prepare the final account, which are the trading, profit and loss, and balance sheet. So these are the steps we are going to follow, as simple as that. Any questions, professors? Yes, question time. Ifya, Ella, Jacinda, Mame, is Prophecy, and Prof. Natasha. I still want to hear from you. I think you are muted and you went off again. Can I hear from you? Just a hello to the class.
Hello, sir.
Oh, okay, Prof. Nice having you. Your name, your school, and maybe any other information you want to give us.
Okay, teacher. My name is Natasha Azu, and I attend Methodist Girls.
Okay, great, great. Okay, so I guess we'll do other introductions at another time. Okay, so dear professors, thank you anyway. Any question on what we have discussed so far? No questions. Let's move on. Now we should note the following. So if you check the steps that we just went through, let me do some summaries here. Okay, so dear professors, summary number 1, we say that if you are looking for capital, please, what do you prepare to determine the capital? I want to hear from my professors. What do you prepare to get your capital? If you know this one, just unmute and talk to me. Let's not waste time. Based on the steps we read, what do you do to prepare capital? Yes.
Statements of affairs.
Statement of affairs. So our job will be to prepare this statement of affairs. Number 2, if you are looking for credit sales, what do you prepare? This one I'll call people. Prof, yeah. If you are looking for credit sales, what do you prepare? Oh, I can't hear her. Okay, so I think that's the debtors. You prepare the debtors account, right? If you are looking for credit purchases, you prepare your creditors account. If you are looking for your expenses incurred for the year, you prepare the expense account. If it's income, you prepare the income account. And then number 6, if you are looking for cash or bank balances or drawings or amount paid to creditors, or amount received from debtors, you prepare the cash. So actually the cash book is prepared to determine a chunk of items, note them. But the main one is you want to know the cash balance or the bank balance. But others could be the drawings, the amount paid to creditors or amount received from debtors. I don't know why I'm losing most of my students to this network. Okay, so that is our major business for now. So the first one we'll look at is how to prepare the statement of affairs. Statement of affairs, please. Yes,
Mr.
please.
Mo, Mr. Mo,
Yes, Professor.
please can you go back to the previous slide? I wanted to take a screenshot,
Oh,
but
okay.
then you moved.
Okay. Okay. So I guess we can move on. Okay, so what we are going to be doing is preparing statement of affairs, debtors account, creditors account, okay, and then the TPL and the balance sheet as well. So let's look at the statement of affairs. Dear professors, the statement of affairs is more or less like a balance sheet. When I say a balance sheet, it means it is presenting your assets, liability, and capital, right? But this time, the focus is we are using it to calculate our capital. So we'll go back to the accounting equation, which says asset equals capital plus liabilities. What are we looking for? We are looking for capital. So C is equal to, I'm sure you can do the mathematics here, change of subject. So your capital is equal to your assets minus your liabilities. Okay. So we are going to just use this one and present it on this statement of affairs. So on the statement of affairs, we are looking for capital, right? So what do we have to do? We have to less liabilities from asset. So this is a simple format I put here for you. Let me go down so you can see it briefly. Don't bother about the notes. I'll share it with you. Okay. So this is a simple statement of affairs. So first of all, you list all your assets. Okay, like we do. You start with your fixed asset followed by the current assets. Okay. Then you less your liabilities. So you less your current and long-term liabilities, all the liabilities. Okay. To determine your capital. That is your statement of affairs. As simple as A, B, C, D. So when they give you the question, you look for your assets, you list them, you look for your liabilities, you less from the assets, and you get your capital. Isn't it smooth and easy? Yes, it is. So quickly, I think my focus today is for my student to be able to prepare statement of affairs. Okay. Now, the only tricky bit here is that you are going to prepare this statement of affairs at a particular date. So always pay attention to the date. In that, if you are asked to prepare it as at 1st January 2005, then you look for all the assets and all the liabilities only on that 1st January 2005. Okay, you can as well be asked to calculate it at maybe 31st December. Okay, so it's the date you have to pay attention to so that you don't pick the wrong assets. Any question before we prepare a statement of affairs? Any question, professors? Question. No question?
Yes, please.
Okay. So let me get one of the illustrations which is requiring us to prepare a statement of affairs. The first one is, but Okay, let's use the first one. Okay, so there's the question. Now it says Georgina Ria started business on 1st January 2006 with $80,000 capital in cash. $80,000 capital in cash. She kept very few records for her transaction in the first year of business. The assets and liabilities as at 31st December were as follows. So you have freehold premises, debenture, stock, debtors, creditors, cash, and bank. During the year, Georgina Ria withdrew 18,000 cash for her personal use. She also paid $12,000 received from the sale of her private car into the business bank account. Now, all I'm asking you to do is to prepare the statement of affairs as at 31st December 2016. Remember, I told you the statement of affairs is like the balance sheet. So when you see the title asset, you shouldn't be confused. So, dear professors, all that this requirement is asking of you, is that a good sentence? I hope so. All this requirement is expecting from us is that we should prepare the statement of affairs, or for that matter, calculate the capital, right? So what do? We list all the assets, we list all the liabilities, but we have to consider the date. The date is 31st December 2016. So we have this problem. Please, let's solve it, dear professors. Any idea? Okay, so it's as simple as that. When you go through the question, you'll see that we are given that the asset and liabilities of the business on 31st December were as follows. So they have given us these asset. Now, if you go through the question, I'm not sure you find any asset or liability on that date. This capital, which was cash, was on 1st January 2016. So it cannot be the cash cannot be part of our statement of affairs, right? Because it was not on 31st December. We are only looking for assets and liabilities on 31st December. So frankly, it's your the information you have here, and the first one is freehold property. The debenture is a liability, right? Stock is an asset. Debtors asset. Creditors liability. The cash and bank is an asset. Now the other information, there's nothing in here telling us about an asset on 31st December 2016. Okay, we were told during the year he withdrew 18,000 cash. Okay, great. So let's look at how you prepare the statement of affairs, which is the same as you calculating the capital. So there you have it here. So let me do that quickly. So you put your title, statement of affairs, as at the date you are asked to prepare, 31st December 2016. And as I indicated to you, so you bring your assets and you acknowledge I started with the fixed assets followed by the current assets, right? So you sum them and then you less the liabilities, which were creditors and debenture. And then what you get is your capital. So this is your statement of affairs. Very simple, very simple. I have 2 minutes. Let me see if I can show us another illustration. Okay, I think we have this one. Okay. Yeah, Prof. Ella, please go ahead.
Please, I thought in the question there was drawings or
Yes, drawings, but here you see the aim is you are calculating for capital, right? And drawings, okay,
okay.
the drawings that took place had nothing to do with the balances on the 31st December, right? So there is no need for us to adjust it with the cash or whatsoever. Okay. Remember, you are only using the balances, okay, the balances on your assets and liabilities. As at that period, you are calculating your capital or preparing your statement. Okay, so dear professors, I just gave you a tip of the iceberg. When we join the second session, we'll go through series of illustrations and prepare the statement of affairs. However, if you have questions, we have some 1 minute to spare. So ask me your questions and let's move.